Hi, I'm Guy Myles, founder and CEO here at Flying Colours. In each of these videos, I talk about themes that matter when investing your money. Today, we'll take a look at what's been happening in markets over the last quarter of 2024. As always, a lot of things have happened in global markets over the last 3 months, but it has really been about all one word: Trump. That's right. Donald Trump, one of the most polarising men in the world and now the most influential man in the world. In the past few years, his opponents have failed to jail him, assassinate him twice, and finally beat him in an election. The result was one of the most one-sided US elections in years, with Trump and the Republicans now controlling the presidency, the House of Representatives, the Senate, and the Supreme Court. This time around, we can expect a different and more focused on change Trump as he looks to frame his legacy. In terms of the markets, almost everything that happened this quarter was a reaction to this historic event, and it will, in all likelihood, shape events for better or worse for the next few years too. So how will that impact markets? Trump is likely to increase tariffs to reduce imports in the US and then try to expand domestic manufacturing, reduce government spending, and reduce taxes. This will likely mean somewhat higher inflation, especially in the US, lower global economic growth, as taxes in the form of tariffs slow trade, and a whole lot of uncertainty. In the short term, the US stock market responded very positively to all of this and rose sharply after the result. However, European and Asian markets all fell slightly as these areas rely more on global trade and will suffer from any tariffs imposed. A diversified portfolio holding assets globally should have done well, but relative performance will depend on exact market exposure. Global bonds, meanwhile, responded negatively to the result as the potential for higher inflation and the absence of any plan to reduce US budget deficits made investors nervous. The other big event last quarter was the UK autumn budget statement from Chancellor Rachel Reeves. The combination of recently agreed public sector wage increases and large increases in tax for the private sector was poorly received by markets, and this put additional pressure on UK bond yields. The result? The important 30-year gilt yield is now considerably higher than at its peak reached under the much maligned Liz Truss government. Now, markets constantly fluctuate and we shouldn't overreact, but it is fair to say that we should all hope that the Chancellor can regain some market trust soon. If you have any questions about today's video, please get in touch. Just email hello@fcadvice.co.uk. Finally, as ever, I've been talking about investing, which means that your capital is at risk. Thank you for watching.